Today we are going to see about General Electric. General Electric is a 125-year-old company which is in various businesses and faced a huge downfall and trying to get over from it. Before discussing about the downfall of the General Electric, let's discuss what is General Electric and how it is formed and what is their uh, track record look like. We all know GE as an electrical and home appliances manufacturer company. Let's see how it started. We all know Thomas Alva Edison, who invented the bulb in 1879. He is the mastermind behind General Electric. So after his invention, he is involved in many electricity companies, and in 1890, 11 years after his invention, all those companies merged into a single company called Edison General Electric Company. A couple of years later, in 1896, the company merged into another electric company to form General Electric, and a lot of happened in these 126 years. Let's see it in a glimpse. So then General Electric has become the symbol of American business from then. Over a time, GE is one of the most innovative and inventive companies that we could think of. They started with electricity, and ever since they have been involved seemingly in every business. They have made an early and big impact on industries like home appliances, jet engines, nuclear power, television, radio, and medical devices as well. They made the first American jet engines, and they are into a variety of businesses. So they are in the meantime they have bought and sold numerous companies over the years. From 1907, GE spent over a century on the Dow 30 list. Dow 30 is the list of America's top 30 companies, and it was removed in June 2018 due to the reduction in market capital. Even after the recovery from the recession, they started falling again in 2018. Its market cap in 2010 is around $170 billion, but currently its market cap is just only $100 billion. There is a slight downfall, and their major decline was during the period of Jeff Immelt as their CEO. That is between 2001 to 2017. Maybe they have diversified a lot, which led them to huge debt. They bought and sold a lot of things at bad prices. For example, GE acquired Alstom Power in 2014 when their power portfolio is yielding a major chunk of the losses. In 2017, they bought oil giant Baker Hughes, and now they are trying to get rid of it in just around 5 years from when they bought. And in 2016, they sold their appliance businesses. So they have done a laundry list of failure dates, which is the major reason for this downfall. Let's see what are the factors that led to the downfall of GE.
Hi, so now we will see after the 2007 and 8 financial crisis how the GEO has seen ups and downs by this the table life cycle that is shown in the figure above. We also see the few important mistakes that are made under the CEO, Mr. Jeff Immelt, which has led to the downfall of GE. So in this part, we will see the selling of NBC Universal stakes by GE to Comcast. We will also see how the NBC Universal stake is contributing to Comcast today, and what are the valuations of NBC today and GE, what it is, and how it could benefit GE if it has not sold the NBC Universal stakes to Comcast, which is a cash cow for GE. As per the analyst, the GE was supposed to sell NBC to Comcast in order to finance its industrial sale. The finances that comes from the sale of NBC, as per the analyst, could help the industrial sales for the GE. But while selling the GE, NBC was a profitable venture with having EBITDA of 3.35 billions. However, while selling it to Comcast, it was sold 9 times of its enterprise value over EBITDA. That is for around 17.9 billions, which was, though it was seemed to be a better deal here, but in future, when we see the growth of NBC, that how it has helped and contributed to Comcast growth is immense and will prove to be a mistake for GE. So this is the graph showing the post-acquisition of NBC by Comcast and how it has left GE in the dust. This the graph showing the yellow line showing the growth of Comcast. It was huge, and the blue line showing the growth of GE that has left GE in the dust and has skyrocketed growth for the Comcast can be seen. So this is the pie chart that shows the revenue and adjusted EBITDA for Comcast. Now we'll see that here media and studios business was formed part of the NBC which was sold by the GE to Comcast. Here we see in revenues, it is clearly seen that media and studios forms around 27% of its total revenue, and when we look at the adjusted EBITDA, it is around 14%. That is a huge when we see a particular segment and a purchase. So in this, we can clearly see the payment made to GE by Comcast. Here in 2011, when Comcast had paid for around 51% stake, that is just 6.2 billion, and for the remaining 49%, Comcast in 2013 had paid 16.7 billions. So if we see the total value paid to GE by Comcast for the NBC is just 26.2 billions. However, on the contrary, if we see the current scenario, if we see the current value of NBC, it is around 100 billions of 230 billion valuation of Comcast. However, the valuation of GE is just 98 billions. So this has clearly shown that GE has let its cash cow go away for very cheap, and has proved to be one of the biggest mistake of GE under the CEO Jeff Immelt.
Hi, I'm Vinayak Vyas. Would be discussing about the second mistake made by GE, which was pivoting towards the oil and gas business. Then CEO Jeff Immelt posted about growing GE's oil and gas business from a non-factor to GE's largest. At that time, GE overinvested in the business, and it was to overcome the financial crisis of the 2008. Immelt also saw this as an opportunity for an industrial growth. In 2012, the investment looked fair as the oil prices continued to rise. GE had improved its EBT from 14.2 billion to 14.7 billion. But oil was 9% of the consolidated business and profit was 8% of it. Oil profits grew at a rate of 37% since 2010, and it was like a good dream for GE. Though GE talked about having a less volatile business, but it was putting a lot of capital in the volatile oil. In 2013, GE announced a $3.3 billion acquisition deal for Lufkin, an oil field equipment and pump manufacturer. In 2014, strong oil reserves allowed GE to increase its EPS to 164 a share. GE noted that it had made 11 billion of oil acquisition since 2007, which was a major chunk of their capital. Though the profits were increasing, but actually the revenue had shrunk to $146 billion. GE shown that it was delivering for investors as it could be seen in the right diagram with its industrial growth. And Immelt also felt that GE share price had only increased to $5 in a time span of 1 year. Immelt felt that the stock was undervalued. Coming to the repercussions of the mistake. Now the oil prices showed their volatility and the price of oil remained depressed from 2014 to 2016, and GE had to suffer losses. So GE decided to reevaluate its oil strategy. GE decided to be in a partnership with Baker Hughes, and it invested a $7.4 billion. GE was doubling down its oil bet, but it was a very weird way by doing it through partnerships, as GE had already invested an 11 billion as we saw earlier. GE has forecasted its EBITDA to be 5.2 billion, but BHHGE or Baker Hughes GE just earned 700 million of operating income and also had a depreciation of 1.5%. The worst could be that the company also clashed in a cultural war, and GE had to appear to sell off its positions at a huge loss. Now, as it could be seen that GE GE's growth had been declining, so on June 12, 2017, Jeff Immelt announced he would step down as the CEO as compound annual growth rate was only 0.4% during his tenure.
Now we will discuss the third mistake by GE. GE said it would sell most of GE Capital and it would take a $16 billion charge initially. But later, at the end of a year, we find out it was $22 billion after tax, which means pre-tax charges were significantly more. Not only was GE's existing business that are in 8 billion pre-tax in 2013 or 1.5% return on assets, which is very high for the banking industry. In further value destroying moves, GE was using the cash that it got from the sale to buy back debt. GE reduced short-term borrowings by 30 billion and its long-term borrowing by 40 billion. With these sales, the cost of equity is higher than debt. So when you use cash to buy back, then it is usually value destroying rather than making a smooth exit over time in more panic.
Banks and other financial companies were eager to format the carcass of GE Capital. GE sold its real estate businesses. The Blackstone Group, BMO, bought GE Capital Transportation Group, which had about 12 billion of assets. Wells Fargo Booties Commercial Distribution Finance Division of 32 billion of assets in 2015. Email completely dismantled what Bishop Bull. The issue of selling GE Capital was twofold. GE Capital is very profitable in many sort of these businesses at a $22 billion after tax loss. Let's get into the final mistake, which was the smallest of the four mistakes, which was the purchase of Alstom French power company. GE purchased Alstom for 10 billion in 2015. I will just briefly talk about it as the results are not separated. But we can see that previously GS Power division had 20% operating margins, and now the company is nearly break even. For from all indications of Amstel is losing GE a lot of money per year. For example, power revenues declined by 7 billion in 2018, and GE recorded a negative operating profit. Elmstone was also considered a blunder as it enhanced GE bed into fossil fuels, which was further far away from renewables.
Now, coming to the conclusion. Mistake number two was now coming out. The price of oil remained depressed in 2015 and 2016. G suddenly had to rethink its oil strategy. G decided to make partnership with Baker Hughes, but in order to do this partnership, they decided to add $7.4 billion into the investment. So GI had to already spend 11 billion on acquisition, and now they just added another 7.4 billion. GE was doubling down on its oil bet, but in a very weird way, through a partnership that would also allow it to exit the position as BHGE would be its own separately traded company. The partnership did not live up to the expectations. GE forecasted $5.2 billion of EBITDA for 2018, but BHGE earned 701 million of operating income and had 1.5 billion of depreciation, implying only 2.2 billion of EBITDA, well below GE's target. Was the two companies are mired in a culture war, and GE appears to be willing to now sell out of its position at a huge loss. With all the mistakes, made investors did not notice G blowing up until 2017. IMO are properly announced in June that he would be stepping down and John Finray would be taking over on August 1st, overseeing else 10 years G had gained an amazing 0.4% a year by amazing mean absolutely terrible emotes big mistakes was that after 2008 he decided way too happily to listen to analysts and shareholders and started making volatile changes to G's portfolio which ended in G being very weak businesses compared to what it was beforehand. On G named a new CEO, John Flannery, like Amelo, headed G's health division before he became the CEO on November 13th when they rolled back G's 2018 $2 EPS target and cut the company's dividend to 12 cents. In December, he laid off 12,000 power workers in January 2018. We learned that G did not completely exit the insurance business that we discussed in 2005. G sold most of the insurance business, but they had to keep the riskiest life insurance policy, and this came back to bite them in 2018. G took a 6 billion start charge and it said it would need to build reserve of 15 billion over 7 years. This was another sloppy move by Amelo in 2005. He G exited in his and G kept its riskiest policy. However, G's charge should make the company appropriately reserve now, and there is likely to be a limited future risk in June. G was booted from the historic Dow Jones Industrial Average on October 1st. Its new CEO, John Flannery, was fired. A new co came in Lawrence Skull, who used to be the CEO of Danner, called then cut the dividend to 1 cent any recently in Q2 2019. Said G would earn between 55 to 65 cents a share in 2019, a far cry from $2 IMO had projected in 2018. I hope you enjoyed the fall of G and its sad story of a CEO who always tried to please shareholders and move too quickly. Thank you so much.